mean, actually, if you look at,
Good
if
time.
you want to start your career, starting angel investing or syndicates or in venture as the market has crashed, perfect timing. So congrats, Grady,
Perfect.
on starting right after the Silicon Valley Bank collapse and the end of ZERP. But I'm curious your thoughts on the backlog here.
Yeah, we wrote our first check in like October 2021. And based on our strategy, we kind of avoid a lot of the AI application layers or some of these sexy deals that have really gotten overvalued over time. So we've been fortunate just based on who our LP base is, and the strategy kind of keeps us away from some of these. It means we won't hit all of these big winners that you guys have in your portfolios. But we did invest in a few funds that had pretty well-built portfolios. So they're in that kind of 2019, 2020. And our first couple managers we do struggle with because they're the ones that, as Dave would say, like, I don't know what those markups are. They can mark them up every quarter. They can mark them down. I kind of let the managers do what they're going to do, and then we disseminate that information to our LPs.
Wait. You're letting the managers do what they want to do?
We are not the biggest check, Dave. So at some level,
we'll
got it. Monitor them. We'll monitor them. All of our funds, I will say this, all of our funds are amazing. We won't invest in every amazing fund. But what they do is focus on the institutional quality. We trust the other LPs. We'll talk to the other LPs probably more than we will the managers half the time. Certainly on our earlier funds that are in that kind of, like Jason said, that peak ZERP timeframe, that have heavy software plays, that have not seen up rounds, that are more cash constrained today because it's been a couple of years, because I think their valuations were too high. So at some level, but we also have 280 companies in the portfolio right now. And so
wow.
For what we're monitoring, I monitor more across the industries and the sectors. But to your question, Jason, we look at some of our heavy hitters. We make sure that those companies are still well in line and on the right trajectories. We can't monitor every single one of them. We were talking to one of three on our team, and so we trust our managers like as much as we can, Dave. But we do trust our managers to make sure that those markups are appropriate.
How do you? How do you have buckets you put them in? I'm sure when you have your meetings internally, Grady, you say, hey, we got 280 companies here. We have to have some mental model of how to bucket them, how to organize them. How do you do that?
Yeah, we do heavy diligence up front. We'll date managers for quite a long time, trying to talk to even GPs like all of you guys in the space that'll co-invest with these managers.
No, but with the look through to the 280 companies, I'm curious if you have a CRM, a Google sheet with all of the individuals, and then you say, hey, here's our 1, 2, and 3s, which is how we do it internally. We have a 1, 2, 3 system, and I'll explain it in a second, but I'm curious what your system is.
Sure, we bucket across. I mean, I look at unique geographies and unique sectors, and then I make sure that the access or the balance across the portfolio, we don't have a lot of overlap. A lot of our funds will have overlap. Like you guys can probably guess, we're a regional-based venture fund. There's a reason we have some Wisconsin-based investments, Illinois-based investments, and so some of them have some overlap, but across stage and across sector. We've been fortunate in the 280 companies. They're all fairly unique to individual GPs in the portfolio, which is great.
So you don't have a bunch of overlap like, Harvard or Yale or Duke might have 5 managers who figured out how to get into Uber or Airbnb and Coinbase during that era, and they have different investments. They might have Bill Gurley doing the Series A of Uber, and I don't know, Menlo and Shervin doing the B, me doing the seed, or Saka doing the seed. You can kind of have that look through. Tomas, I'm curious, do you put startups into buckets so you can have a mental model of where to allocate your time? And how do you think of the allocation of your time as a GP when, you could have companies that are clearly unable to raise and struggling, some that are figuring it out and promising, and then others that are breakouts? How do you think about allocation of your resources?
Well, we run very small portfolios. We have 10 core positions in Fund 1. We'll have 15 core positions in Fund 2. And so we tend to have a lot of time to be able to focus on those companies. And one of the reasons is we do think that some TLC, particularly when we invest at the seed and the A, can meaningfully change the trajectory of that company or allow us to recover more of the capital, let's say.
That's super concentrated.
That's unbelievably concentrated.
High conviction at seed.
High conviction. And so this is an interesting little cul-de-sac that we should go over here as we sort of thread this journey. You said, hey, you can have meaningful impact. Give us an example of, hey, you got this really concentrated portfolio. You have two companies that maybe are trying to figure it out, perhaps struggling, lost in the wilderness, whatever it is, however you like to phrase it. What have you done or what have you seen is the most high leverage where you can have an impact?
Yeah, I mean, I'll give you one story. We invested in one company, immediately identified that the sales leader was not the right person for the role. And we have two great sales leaders on staff who built the sales functions at two unicorns. And one of them actually has been acting as interim VP of sales for that company. And since then, we've exceeded quota. We've exceeded our targets every quarter since.
So you embedded an expert. This is Antonio from Valor does this. He's got really great operators, so he'll embed people into companies when they're having a challenge. And that company could be anything from a Tesla to a SpaceX to, I don't know, he's got so many great companies. And it's not that the company is missing anything. It's just, hey, you can shorten the time between when the problem's identified and the problem's resolved. Is that what I'm reading correctly?
That's exactly right. Right. And so if you think about, okay, can we save a startup 2 quarters of learning for them to achieve the same goal? The slope and the trajectory of the business is now meaningfully altered. And as we know, and Dave can dispute what the forward multiple should be because he says that maybe they're a bit too aggressive, but the greater the slope, the bigger the forward multiple and the more valuable the company. And so we started with go-to-market. I think we may explore other areas here, but that's the one where we find if we can get that right or accelerate the learnings, we can increase the trajectory of the business.
We're all familiar with AWS, Amazon Web Services. That's the cloud platform that powers so many of your favorite brands. But do you know about AWS Activate? That's their program for startups, where they provide up to $100,000 in AWS credits for all startups. Whether you're backed by an investor or you're bootstrapping, money is time to keep innovating, time to delight customers, and time for you to keep gaining traction. You need runway, and AWS's Activate is going to help you with that runway. We hear this story from so many of our founder university companies. They're finding product market fit. The word's getting out about their product, just a little boost, finding some savings here or there to get a little extra time can be the difference between getting traction and bringing in revenue, or, hey, let's call it what it is, running out of money, okay, and shutting down. AWS knows this. That's why they've created the ultimate toolkit for early stage startups looking to boost growth. With AWS Activate, you're going to get up to $100,000 in AWS credits, hands-on support and training, plus exclusive discounts with some of our favorite companies and tools. So start getting the support you need at every stage of your startup journey. To learn more, visit aws.amazon.com/startups/credits. That's right, aws.amazon.com/startups/credits.